Is cash always king? No, it's not. It's not. Cash is the worst. In loan land, we hate cash. Okay, so let's talk about this. I've been in the Bay Area for 15, 20 years, right? So I've seen the market really go from like great to, oh my goodness, you know, there's cash everywhere, there's all this stuff going on. And over the years, I've learned some top tips from some of the real estate agents I work with, and I'm gonna share those with you today, okay? Because I know I have a lot of friends in other states outside of California where the market is shifting to very competitive, more cash offers, et cetera, et cetera. So I'm gonna share two big things to keep in mind when either you're competing with cash or you're a listing agent looking at a cash offer. So let's start off with that. So number one, a cash offer is worthless unless you can verify funds. Yes. In the heyday of the Bay Area, when it was first starting to pop, we would see so many, this was like before the agents were verifying assets aggressively, but we would see people go, oh, just write it as cash and then get the loan. That was like a standard move. The real estate agent would tell the buyer to write it as cash and then we'll just get a loan. Okay, so then the other realtors figured that out and they're like, whoa, we need to verify assets. Okay, so then the next move is, well, just show them your 401k and then we'll get the loan. Yeah, so what you need to know as a real estate agent is that not all funds can be fully liquidated. So if you have, for instance, someone who's currently working and maybe you're looking at a deferred comp statement or that 401k, the odds that they have access to 100% of that money, you know, without like quitting their job or something dramatic like that. So you really want to be able to know, okay, are these funds liquid? Yeah, now if they show you a savings account with $1 million and the house is 400, yeah, they're liquid. They're very liquid. Congratulations on your liquidity. Although it's being invested in nothing, so not sure about that. So really you want to ask for that. If they're unwilling to provide proof of funds, be suspect, because as a lender, I can tell you, you know, I have hit real estate agents who are unsavory over the years, where their whole game is to lie to the seller on the contract. Because the theory is this, oh, well, you know, if we'll just close the loan, they won't care where the money comes from. That is literally the way it's said. So number one, verify assets. Number two, how much is the earnest money deposit? And if the buyer backs out, how much could they actually lose? So what you'll see sometimes is you'll see, let's say it's a $300,000 cash offer and the EMD is like $3,000. Well, if they decide to back out, do you really think that if they find something wrong with the house, do you think they're really going to buy it because they're cash if all they have to do is lose $3,000 if they back out? Probably not. So you'd want to look at how much money they actually have at stake. The biggest misconception is it's cash, it's going to close. And that is so wrong, because there's still ways to get out of the contract. There's still ways to make it so that it doesn't close. And this is where the top tip for buyers and buying agents come in is always ask to be backup. And if they go, I already have a backup, say, can I be behind that backup? Can I be your second backup? We actually have a client right now. The real estate agent was very savvy and she said, you know what? If anything goes wrong, my clients love this house, please tell us. There were two offers ahead of them. Both fell out for different reasons. One fell out because of financing. The other one fell out because of inspections. Our buyer's about to close. They're thrilled. You know, hallelujah. Right? So you always want to make sure that you have that backup position, because just because someone says it's cash does not mean it's 100% going to close or that it is. So I know this was very quick, but it's a very quick topic. You know, put your money where your mouth is. If you say you've got it, you need to show it. If you're telling some seller that, oh, if you do cash, it's going to be easier, well, then it should be a contract with no contingencies and a 2-week close, right? I did see on TikTok a real estate agent was talking about how they accepted a cash offer. They accepted a longer close because it was cash and the buyer really needed this longer close for some other reason. Well, guess what? It never closed. It never closed, and the seller sat there on the market for 3 months because the person never actually had the cash. So I hope this has been helpful. Questions as comments. As always, I am licensed in 46 states to do mortgages, so please reach out. Thanks for watching.